we've had a good couple weeks in silver, and I think there's that party is just getting started. So I think silver can, and my long held target is 60. I think that can be seen, if not by the end of this year, and I think it very well could be by the end of this year, be early next. So, 60, and I've said recently, if it breaks 60, you could run to 75 very quickly. My target on gold is 3,000 this year. I think we're going to see pauses along the way, but generally you had your consolidation, so don't sit around looking for another one, because I think this thing is, you're just getting started.
The silver run-up continues, sparking excitement among investors who have patiently awaited this moment for years. At $27.99 per ounce, the gray metal has finally surpassed the June 2021 high and is edging closer to the January 2021 peak of $28.52. This surge, described by popular contrarian macro strategist David Hunter as the melt-up phase, is expected to lead to significant price gains in all asset classes. Hunter's optimistic outlook is further bolstered by his prediction that silver will reach new all-time highs of $60 to $75 by the end of 2024, or, at the latest, at the beginning of 2025. David Hunter, a renowned macro strategist with 50 years of experience, has been anticipating a melt-up phase for several months. When the U.S. Federal Reserve and other central banks began raising rates in 2022, and other experts were predicting a meltdown in the markets, Hunter took a different stance, instead foreseeing a melt-up in stocks, bonds, and precious metals. His insights, shared during a recent interview with Liberty and Finance, provide a valuable perspective on the current market conditions. According to Hunter, we are now in the beginning stages of this melt-up phase, but there is so much more to come, not just for silver and gold, but for all other investment vehicles. We will present clips from Hunter's interview with Liberty and Finance. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also drop your comments and observations in the comment section below. We appreciate all your contributions to our growth. Please enjoy the video.
Yeah, I think we're coming to the last phase of a 41-year, what will be close to a 42-year secular bull market that started back in August of 1982. Disinflation drove that cycle, and then we've obviously had in this last few years the breakout of inflation and having to go through the tightening cycle, et cetera. And back, as you say, back in 2022, people got very bearish, and we're talking about S&P down to 3,000 or below, and maybe much below 3,000. And although I see that coming, I didn't feel that was the time for it, and I felt we would get through this tightening cycle and have one more push to the upside before this market topped out. And that in spades is what I think we're seeing. The S&P is up 50% from the October 2022 lows. The NASDAQ's up over 60% in that time. You're seeing the Russell finally begin to join the crowd. The Dow's up pretty good, not as much as the other two, but doing pretty well. And you're starting to see a broadening of the market, which I've been calling for quite a while. Well, my target on the S&P is 7,000, NASDAQ 23,000, the Dow 55,000, and the Russell 2,000, I think, can get up to 3,300. And I am beginning to think those numbers may prove conservative. Gold had basically a triple top, maybe even a quadruple top there before it broke out. Started back in 2020. It ran up to the high 2,000 area, went back down, came back up in 21 and again in 22. And we're finally breaking through to new highs. And once it broke out, you started seeing people kind of jump on the bandwagon. So you've got legs there. My target on gold is 3,000 this year. What I call pre-bust. Doesn't have to coincide with the top of the equity market, but I think it's likely to be this year. And it's a short-term move. And I think we're going to see pauses along the way, but generally you had your consolidation, so don't sit around looking for another one because I think this thing is and silver, which has gold's at new all-time highs. Obviously, silver's a long ways from its old highs and has been the laggard for a long time. As you say, the gold silver ratio is up, was up at 89, I think, and is just starting to come back down. We've had a good couple of weeks in silver. And I think there's that party is just getting started. So I think silver can, and my long held target is 60. I think that can be seen, if not by the end of this year, and I think it very well could be by the end of this year, be early next. So, 60, and I've said recently, if it breaks 60, you could run to 75 very quickly. So 60 is still my target, but I wouldn't be surprised if that's low. That's a long way. I mean, silver's, just been in the kind of low 20s range for quite a while. Finally has moved up to 27, and I think could move very quickly to the mid 30s and then maybe pause and run again, or certainly move up into the low 30s and pause.
As the melt-up reaches more advanced stages in the coming months, Hunter says there will be more signs of the global economy, starting from the banking sector buckling under the pressure of all the unchecked money creation. Hunter adds that the result of this will be a global deflationary bust that will be accompanied by a financial crisis of historic proportions. Hunter says the bust will have the same timeline as a recession, but will resemble more of a depression in intensity, and he is predicting that it could happen within the next 15 months. Hunter also compares the bust to the 2008 global financial crisis. The macro strategist believes that's when the bust should have happened, but central banks came to the rescue by pumping trillions of dollars into the system. We've been able to kick the can so far down the road, but we can only pump as many trillions of dollars into the system without getting some very grave consequences. Let's get back to the video.
I have been on record as saying that the highs in the stock market this year, and as I say, I think 7,000 on the S&P is my target. If we reach that high, or whatever high we reach this year, and if that's the secular top I'm calling for, I don't believe we'll get back to those highs or anything close to those highs again in the next couple decades, and maybe longer. This is a major final thrust into a top. And the reason for that is because first, we're going to have this 80% bear market in the global bust. Global bust is something I know people hear the name, the term, but I don't think they really understand how significant that is. It's nothing like what they've lived with in post-World War II era. It's going to be a short-lived, I think, relatively short-lived, 12 or 18 months. But you're going to be wondering what's coming out of that because it's, bank failures, it's a lot of things. So it's 2008-9 was kind of a precursor to it. So you got a pretty good taste of what a financial crisis looks like. This one I think is going to be worse. But coming out the other side of that, because the central banks are going to have to respond so aggressively to that bust, the printing of money to a degree we've never seen in this world, and 2020 was beyond anything we'd ever seen. This will be 4 or 5 times that, will trigger an inflation cycle in the post-bust era, meaning 2026 and beyond, and could culminate in inflation getting up as high as 25% in this country by the end of the decade or early next decade. If that's the case, that really shrinks PE multiples, market multiples. Stocks are very interest sensitive, and if interest rates are going down as they were the last 40 years, generally trending down, it boosts price earnings multiples. It boosts the market multiple tremendously. You get the reverse of that, where rates are moving towards high double digits, and price earnings multiples, or a market multiple that's 20 or 25, can move back down to single digits. So that puts a real damper on equity markets. There will still be many stocks that will perform in that environment, mostly commodity producers, precious metal miners, industrial companies that serve those industries. So there'll be places to make plenty of money in the next cycle following the bust. But the stock market as a whole, index funds as a whole, will face a very stiff headwind that's going to cause them to underperform and maybe even go negative during that time. So in that time, what does thrive, and we can go back to the late 70s and early 80s to compare a similar period. What does thrive in that are the precious metals, are the commodity producers, are the metal miners. So I really think, and energy, those are kind of the areas that I think will be the big winners in the next cycle.
After the melt-up and the bust, Hunter predicts that the next phase will be a commodity supercycle of historic proportions. According to the renowned macro strategist, the supercycle will be caused by excessive money printing to combat the bust, which will send inflation to double digits. Asset prices will also climb rapidly, but not all assets. Hunter is more bullish on tangible, safe haven assets like gold and silver than assets like stocks and bonds. This is because he expects more investors to move away from the system and into precious metals and other commodities, which will cause significant price gains for the commodities sector. Let us know what you think about the macro strategist's predictions in the comments section below. Please share your comments, thoughts, and observations. Also, ensure you subscribe to the channel, turn on post notifications, and smash the like button for more videos on gold, silver, and other precious metals. Thanks for watching.